Docusign stock has been under tremendous selling pressure recently. This former Wall Street darling has seen growth starting to slow, and there are signs that it's struggling with execution. This is a stock that both Brian and I own, but is the thesis for this stock busted? Here's our latest thoughts on Docusign. My name is Brian Feroldi.
And my name is Brian Stoffel.
This video is sponsored by our friends at YCharts. More on them later. Brian, we've done a deep dive into Docusign before, and both you and I think that there's a lot to like about this business.
There really is, Brian. If you look over the last 4 years, revenue has more than quadrupled. Gross profit has kept pace with that growth, which is important because it means that they're not just giving their product away for less. And when you look at free cash flow, it has absolutely exploded up over 1,000% in the past 4 years.
And when I look at the company's fourth quarter results, I still think there's a lot to like. I see revenue growth up 35%, billings growth up 25%. I see a higher gross margin. I see a higher non-GAAP net income. I see higher free cash flow, and I see a war chest of cash. What's not to like?
Here's the thing, Brian. If Docusign was a story and the book ended today, it would be a great story. But the stock market is forward looking. And when I look forward, I'm starting to see some things that worry me. Now, to really get into this, let's look at the score that I gave this company back when we ran it through the Antifragile framework. An 8.5 is a decent score. It's not great, but there was enough that I found out during that process that I was willing to invest in it. But there's one part of it that I'm starting to wonder about, and that's optionality. I gave it 2.5 points out of 3, which is really high. And all of that is predicated on the agreement cloud.
Yeah, just to review, so many people think of Docusign as just an e-signature company, but the thing that attracted both of us to this was really their agreement cloud. This is a tool that handles every facet of an agreement, including creating the agreement, negotiating the agreement, creating the forms, signing the agreement, notarizing the agreement, accepting payments, getting insights, monitoring the agreement. Both of us believe that provided the company with far more opportunity than just e-signatures alone.
Yeah, e-signature alone is a $25 billion market. Neither you or I has any doubt that DocuSign's doing a great job here. It's that other $25 billion market, everything that you just mentioned, that really had us interested.
So I gotta ask, what has changed your mind?
Well, we'll get to the agreement cloud in a second, but first, if we just look at the numbers, we see some things that raise at least yellow flags. Now, revenue growth is slowing, but that's to be expected because COVID provided a one-time push, but it's slowing much faster than some might think. If we look at the end of the current quarter, growth is going to slow to about 30% over the trailing 4 quarters, and by the end of the year, it's going to be all the way down to 18%. That's a rather rapid slowdown, and it makes me wonder, where's the agreement cloud? Isn't it adding anything to this? If we look at billings, we see the same trend. Again, this isn't totally surprising, but the slowdown seems rather dramatic. By the end of this fiscal year, management expects just 15% growth in billings. That's a big slowdown. So if management truly believes that this is a $25 billion opportunity, why is growth slowing so much? And for that, I went to the conference calls. Now, in September of 2021, roughly 3 quarters ago, Dan Springer, the company's CEO, said that he believes that the company is back to where it was 2 years ago, which makes sense. In 2019, DocuSign was ready to roll out the agreement cloud. Then COVID hit, and everyone wanted e-signatures, and they put all of their attention there. He's saying that as of September, we're ready to refocus. We're back where we were 2 years from now, which to me means we're going to start to see some important pickup in the agreement cloud moving forward. But fast forward to 2 quarters ago of December of 2021, and we're starting to see, well, is that really happening? Springer is now saying we're adjusting our sales force. We're going to have them re-emphasize and focus on the agreement cloud. I thought that was what he said they were doing a quarter ago, but now at least they're really moving in that direction and putting their resources behind it. But by the most recent quarter, and this is just a few weeks ago, Springer is again talking about the agreement cloud. When one of the analysts asks him about contract lifecycle management, which is one of the products in the agreement cloud, he says, we really need to field focus our efforts, which to me means we've got the sales force out there. We thought we were where we were 2 years ago, but it's not really getting a whole lot of traction. Could that be a sales problem? Sure, it could be. But could it be that it's just not as attractive to customers as I thought it would be? That's definitely a possibility as well. What all of this made me do was go back and look at my original analysis of DocuSign and take that 2.5 score that I gave the company for optionality and slash it. When I lower it down to a 1.5, that lowers our overall score from an 8.5 to a 7.5. Again, this is still very much in the investable range, but I don't tend to like to invest in companies that are in that area.
Fair enough, Brian. And I agree with everything you just said. And in response to that, I also reran Docusign through my investing checklist. Previously, this company scored in the 80s, which is in my high quality business category, but I recently bounced it down to a 75 in response to this quarter because organic growth is slowing and I'm not giving the company as much credit for optionality. So, like you, this company has fallen on my quality score. Now, there's one more factor we need to discuss that truly made the decision for you to sell Docusign today. Before we get to that, we want to give a shout out to this video's sponsor, which is YCharts. So if you've been following our channel for any period of time, you know that we're constantly using YCharts to make complex analysis more visual, intuitive, and shareable. Brian and I have used YCharts for years to do fundamental stock research, but the platform is actually far more powerful than that. It can be used to compare stocks, mutual funds, and ETFs on nearly any metric that you can think of. Paid users can also easily add their own logo to make it easy to distribute via email, blog, newsletter, or on social media. If you're interested in giving YCharts a try for free, visit ycharts.com using the link in our episode description or follow them on Twitter at YCharts. Thanks, YCharts, for sponsoring the video. All right, Brian, everything we just said, the market agrees in, and that does seem to be priced in. If you look at the company's price to sales ratio, that's fallen to a multi-year low and is currently under 7. If you look at the price to free cash flow ratio, that's basically at an all-time low and is only about 33. So these numbers are actually very compelling from a valuation perspective. Why on earth are you selling?
Well, Brian, I think it's really important to point that out because my decision to sell might end up being a bad one. Under normal market conditions, I would just hold my shares of DocuSign and let this play out to see how the thesis evolves. However, we don't have normal market conditions. Many of the stocks that you and I both hold are down enormously from their all time highs. And I simply think that there are stronger companies out there trading at better deals right now. So I'd rather take what I have left in DocuSign and redistribute it to those stronger companies that have more optionality.
So, in other words, you don't think that the DocuSign thesis is busted, but there are some yellow flags that are causing you to say, I'd rather have my capital in something else.
Exactly. And that something else is also trading much lower than it was 4 months ago.
Well, if you're interested in hearing about what stocks Brian is going to be plowing his DocuSign capital into, let us know in the comment section below. As for me, as a current DocuSign shareholder, I'm not foaming at the mouth to add to my position today, but I still think that the thesis for this company could be on track long term, and I'm going to give the company some time to figure it out. That could also prove to be a mistake, but I still think there's a lot to like about this business, so I am personally not going to be selling. We hope you enjoyed this video. Brian's out.